Welcome to Breaking News to Trading Moves.
It's good to be here.
Today we are looking at a specific transaction in the semiconductor space. We have some pretty solid numbers on the board that give us a look into the future of AI hardware.
That's right.
Micron Technology has made a move in Taiwan, and it involves a fab acquisition.
Yes, a big one. And it's a cash deal, which is telling. The price tag is sitting at about $1.8 billion.
So the headline here is that Micron is buying Powerchip's P5 fab site. And I think we should be clear right off the top, this isn't a merger of two companies. Micron is not buying Powerchip, the corporation.
No, absolutely not. This is a very targeted acquisition of a specific asset. A building, essentially.
Exactly. So today, we're going to look at the hard numbers of the deal. We'll get into the production timeline it sets in motion, and then really break down the specific market winners and losers that the report lays out.
Sounds good.
Okay, so let's get right into the specifics of the transaction itself. We have Micron Technology, ticker MU, signing a letter of intent.
And as you said, $1.8 billion. All cash. That's a strong statement of intent right there. No stock involved, just cash on the table.
And the asset in question, this P5 fab site, is located in Taiwan. This is all about physical footprint, isn't it?
100%. It's about geography and it's about space.
Well, let's talk about that space because the scale is what really stands out when you look at the specs. We are talking about adding roughly 300,000 square feet of cleanroom space.
And that number, that square footage, that is the critical metric here. When you buy a fab like this, you're buying the shell, the infrastructure, everything you need to hold the manufacturing tools.
300,000 square feet of cleanroom is a massive addition to their capacity.
It's a substantial addition. And let's talk about what that actually means. A clean room of that size isn't just an empty warehouse.
Right. Not at all.
No, it's a highly, highly engineered environment. What you're really paying for is the incredible air filtration systems, the vibration damping floors, all the pre-installed chemical delivery lines.
Things that would take years to build from scratch.
Years, exactly. Buying it ready-made or close to it is a huge time saver. You're basically jumping ahead in the line.
So, okay, that brings us to the why. What is the operational goal for Micron here? Why this building? Why now?
The report is very clear on this point. The stated purpose is expanding DRAM wafer output, but, and this is the important part, it is not just for any generic memory.
This is for something much more specific.
Very specific. This whole move is being driven by the demand for AI-linked HBM.
High bandwidth memory.
Correct.
Right.
And the market condition right now, the reason for this urgency is that demand for this very high-performance memory is, it's continuing to outpace supply.
It's a bottleneck.
It's the bottleneck. Acquiring this facility is a direct, calculated response to that supply-demand imbalance.
So this feels like a strategy that's really centered on two things: speed and control.
I think that's the perfect way to put it. It's all about capacity and supply chain control. When you own the capacity, and by that I mean the actual building, the floor space, you just have so much more control over all the production variables.
Variables like what kind of products you run through the line?
Precisely. You control the mix of products, you can fine-tune your processes to improve yield, and maybe most critically, you control the ramp timing.
Okay, explain that. What does controlling the ramp timing give them?
Well, if you're just relying on your existing footprint, you are physically constrained by the walls you've already built. You're trying to squeeze more and more out of a full house.
Which can be inefficient.
And risky. Buying a new facility, a new sandbox to play in, allows you to manage that production ramp on your own terms. You're not disrupting your existing high-volume lines.
So it probably helps them separate their production lines, too. They can, I imagine, dedicate specific areas in this new fab just for HBM.
That's a very fair assessment. I mean, HBM production is incredibly complex. It's not like standard DRAM. It requires different tooling, much longer cycle times. You're stacking chips on top of each other.
Right.
Having dedicated, clean floor space helps you manage all of that complexity without messing up your bread and butter products.
Okay, let's zoom out a little and look at the broader market context. Why does this one acquisition, this one building in Taiwan, matter so much to the wider market?
It all comes back to that AI bottleneck we were just talking about. HBM is described in the report as, and I'm quoting here, essential for AI accelerators.
You literally can't build them without it.
You cannot. You can have the most powerful GPU in the world, but without the HBM to feed it data, it's just a hot piece of silicon. It's the fuel for the engine.
And when you look at the landscape of who actually makes HBM, Micron isn't one of 50 players here. It's a very small club.
A very small club. They are one of only 3 major HBM suppliers globally. That's it, just 3.
So when one of those three makes a move this big,
It changes things. Because the list is so short, anytime one of those companies demonstrates a credible, tangible path to adding more capacity, it sends a powerful signal across the entire AI stack.
it's a signal that the pipes might actually get unclogged down the road.
It provides visibility. That's the key. If you're a company building AI systems and you know more memory is coming in a couple of years, you can plan your own expansions with more confidence.
Okay, but we absolutely have to talk about the timeline because this is not happening next week or even next year.
No, and the timeline is crucial for setting expectations. The target for closing the deal, that's just the point where they actually hand over the keys, is by the second quarter of 2026.
Q2 2026. And that's still subject to all the usual regulatory approvals.
Correct. So that's just to get the building, then they have to move in all the equipment.
So when does the first wafer, the first actual product, come off the line?
Production is planned to start in the second half of 2027.
H2 2027. Wow, so that is a fair distance out.
Yep.
We're looking at, what, 3 years before anything is actually moving through that new line?
And that is what the report calls the longer-dated impact. This is the core of the market signal. Even though the actual production is years away, the announcement itself today sends a message.
And that message is what?
It reinforces the narrative that memory is going to remain tight well beyond 2026.
That's a really vital point. If a company like Micron is spending nearly $2 billion today on capacity they won't even start using until late 2027, what does that say about what they expect demand to look like then?
It says they believe they're going to need it. They don't see demand falling off a cliff. They see a sustained structural need for HBM that justifies a massive investment for capacity that won't come online for years.
So the signal is that this shortage or tightness isn't resolving itself anytime soon.
That's the takeaway.
Okay, so with that context, let's move on to the winners and losers. The report breaks this down into very specific groups. Let's start on the positive side with the winners in memory and manufacturing.
The first and most obvious group is the memory and AI memory suppliers themselves.
And the logic here seems pretty straightforward. It's about the market environment they're operating in.
Yes. A tighter memory environment for a longer period of time, combined with one of the key players having more control over their future capacity, well, that supports better margins for everyone.
How so?
If supply is tight and everyone knows it's going to stay tight, the pricing power sits with the supplier. They have a much stronger negotiating position with their customers.
And this effect applies across the whole memory and storage complex, not just HBM.
Right, a rising tide.
So who are the specific tickers that are identified here?
Well, the first one is obviously Micron technology itself, ticker MU. They are the direct actor here.
Makes sense.
But the logic extends to its peers. So we also have Western Digital, ticker WDC.
And the third one listed?
Seagate Technology, ticker STX.
Now hold on. Seagate is primarily known for hard drives, for mass storage. Why are they included in a list of winners from an HBM expansion?
That's a good question. It's because tightness in one part of the data storage and memory complex tends to lift the whole group. Think about it. If data centers are expanding to handle all this AI, they need the super fast HBM for the compute part, but they also need just enormous amounts of mass storage for all the data those models are trained on and generate. So a build-out for AI lifts the entire data infrastructure sector, from the fastest memory to the biggest hard drives.
I see. It's a broader ecosystem play. Okay, let's move to the second group of winners, semiconductor manufacturing equipment companies.
This follows on from our earlier point about the building. Buying the building is just step one. It's a very expensive box.
But you have to fill the box.
You have to fill it with tools. Exactly. A clean room addition of this size means sustained, multi-year spending on the equipment that actually makes the chips.
And the report calls out a few specific types of equipment.
Yes, it mentions deposition, etch, metrology, and process control.
Can you just briefly, for our listeners, explain what each of those tools does?
Sure. In simple terms, deposition tools are what lay down the ultra-thin layers of different materials on the silicon wafer.
Okay.
Etch tools are like microscopic sculptors. They use gases and plasma to carve out the incredibly complex circuit patterns into those layers.
And metrology and process control.
Those are the inspection tools. They're the eyes and brains of the operation. They measure and inspect the wafers at every step to make sure everything is being built correctly, down to the nanometer.
And the report makes a point that this isn't a one-time shopping spree for Micron.
No, not at all. It happens across multiple quarters, even years. As they ramp up their DRAM plans in this new fab, they buy the tools in phases. So for the equipment makers, this isn't one big order, it's a predictable, multi-year revenue stream.
So who are the tickers to watch in this equipment space? Who's selling them the gear?
The first big one is Applied Materials, ticker AMAT. They are, one of the absolute giants in materials engineering and deposition tools.
And the next one?
Lam Research, ticker LRCX. They are a critical player, especially in the etch and deposition steps, a huge part of the process.
Okay, and the third?
KLA Corporation, ticker KLAC. They specialize in that process control and yield management piece we just talked about. They make the inspection tools that are vital when you're starting up a new facility and need to get your yields up quickly.
So those are the folks building the factory inside the factory.
Got it. Let's move to the next category of winners, which is a bit broader: AI infrastructure.
This is Group 3, the AI compute and networking beneficiaries.
So how does a memory fab acquisition in Taiwan ultimately help these companies? The connection feels less direct.
It's about confidence and visibility. Right now, as we've said, the big AI accelerator and data center buildouts are genuinely constrained by memory availability.
They literally cannot ship their final product.
If they don't have the HBM to go with the GPU, you can't sell a car without tires.
So more memory on the horizon means more accelerators can be planned for and ultimately built. That's it. Credible expansion plans, like this Micron deal, improve that medium-term confidence in what the report calls AI platform throughput. It gives investors, and more importantly customers, visibility that shipments will be able to continue and grow. It de-risks their own expansion plans.
Who are the big names here that benefit from this increased confidence?
Well, the biggest one is NVIDIA, ticker NVDA. They are the #1 consumer of HBM. Their entire data center business depends on a steady supply.
Makes sense. Who else?
Advanced Micro Devices, AMD, ticker AMD. They're in the exact same boat, competing with NVIDIA and needing a ton of high-performance memory for their own AI accelerators.
Okay, and the report also mentions the networking side of things.
Right. So you have Broadcom, ticker AVGO, and Marvell Technology, ticker MRVL.
Why does networking get a boost here?
Because these AI data centers are not just islands of GPUs, they're vast interconnected networks. These companies, Broadcom and Marvell, they provide the high-speed interconnects, the switches, the custom silicon that ties all of those thousands of accelerators together.
So if more accelerators are shipping because there's more memory available,
then more networking gear has to ship to connect them all. The networking follows the compute. If the chips aren't available, the networking gear isn't needed yet either. It's all linked.
okay, so those are the winners. But in every transaction, every market movement, there's always the other side of the coin.
Always.
Let's talk about the losers. The report identifies a broad category of hardware and buyers as the first group that might take a hit.
Yes, and specifically, Group 1 here is the PC and device OEMs, the original equipment manufacturers.
What's the logic for them losing out in a tight memory market?
It's just basic cost inputs. It's their bill of materials. If memory markets stay tight for longer, as this deal signals they might, then their component costs go up. It's direct inflation for them.
And they basically have two bad options, right?
Yeah.
Either they eat that cost.
Exactly. They can eat the cost, which directly squeezes their already thin hardware margins, or they can try to pass that higher cost on to you, the consumer.
Which risks what the report calls demand softness.
Right. People might just decide the new phone or laptop is too expensive and wait. It's a tough spot for them.
Who are the tickers feeling this squeeze?
Apple is the first one mentioned. Ticker AAPL. I mean, think about the sheer volume of memory they use across their iPhones, iPads, Macs. It's a tremendous amount.
A huge buyer. And the traditional PC makers.
Dell Technologies, ticker DELL, and HP Inc., ticker HPQ. And for these companies, you could argue it's even tougher. They generally operate on thinner margins than Apple, so any component cost inflation is a real immediate headwind for their profitability.
Okay. Now, the second group of losers is kind of ironic because it's the big buyers, the hyperscalers and AI infrastructure buyers.
Yes, these are the companies that are actually writing the multi-billion-dollar checks for these massive AI build-outs.
So why are they listed as losers? They're the ones who need all this AI infrastructure.
They do. They absolutely do. But the logic here is about the cost of satisfying that need. HBM scarcity and the resulting high prices directly raise their build costs.
So the price tag for that new data center they're building just goes up.
Exactly. The report uses the term per rack cost. Tight conditions increase the cost to build out every single rack of servers. And when you're building at the scale they are, that adds up to billions of dollars very, very quickly.
It could also just slow them down.
It could. It might slow down their deployment pacing if they simply cannot get the parts, or if the price gets too high and messes with their return on investment calculations.
Who are the specific tickers facing these rising costs?
It's the usual suspects, the major cloud providers. First, Amazon, ticker AMZN for AWS. Then Microsoft, ticker MSFT for Azure.
And the others?
Alphabet Class A, ticker GOGL for Google Cloud. And Meta Platforms, ticker META, for their own massive internal AI infrastructure that powers everything from their ad engine to their llama models.
So these are the ultimate consumers of the hardware, and higher input prices are just bad for their capital expenditure efficiency.
That's the bottom line.
And finally, there's a third group of losers identified here, which is sort of in the middle of the whole process. The supply chain middlemen.
This is referring to the big electronics distributors.
Now, why do they struggle when the market is tight? You might think a shortage would be good for anyone holding inventory.
It's a bit counterintuitive, but a very tight, volatile market creates what the report calls working capital stress for them.
What does that mean?
Well, when component pricing is swinging wildly and allocation is strict, meaning the manufacturers like Micron are deciding exactly who gets what parts and when, it's very, very hard to be a middleman. Your inventory becomes more expensive to hold, and your supply becomes unpredictable.
They get squeezed from both ends then.
Yes, they face margin compression. They can't just mark things up as easily if the big manufacturers are controlling the supply so tightly and selling direct to the largest customers. Their value add is diminished in that environment.
And who are the tickers in this space?
The report calls out two of the big ones, Arrow Electronics, ticker ARW, and Avnet, ticker AVT. These are the massive distributors that sit between all the component makers and the broader, fragmented industrial and commercial market.
Okay, so that's the landscape of winners and losers based on this move. Now, looking forward, what should we be watching to see if this view holds up? What are the key milestones or indicators?
There are a few key things to monitor. The first is pretty simple, just watching the deal itself.
The regulatory approvals you mentioned earlier.
Right. The target for closing is Q2 2026. Does that date slip? Do regulators in Taiwan or elsewhere raise objections? If that closing gets blocked or delayed, the whole timeline shifts out and the market might react.
And then assuming the deal closes, the next step is execution.
Ramp execution. The first output is expected in the second half of 2027. We need to watch and see if they actually hit that date. Building out a fab is incredibly complex, and delays are common.
What about broader market indicators, outside of just Micron?
The report really emphasizes watching memory pricing signals. This is the dashboard. This is the most important thing to keep an eye on.
And what are we looking for on that dashboard? A crash in prices.
Well, we're looking for the pivot point. The crucial question is whether the tight beyond 2026 view holds up. If we start seeing evidence, like a sudden drop in contract pricing for DRAM or HBM that suggests the market is softening significantly before then, well, then this whole list of winners and losers we just discussed starts to change.
How so?
Well, if the shortage ends sooner than expected, the winners, the memory makers, lose their pricing power. And the losers, the PC OEMs and the hyperscalers, get major relief on their component costs.
So the whole thesis really rests on the continued tightness of the memory market for the next few years.
Correct. As long as that narrative holds, this structure of winners and losers remains the baseline for how to view this part of the market.
Okay, so to wrap this all up, the summary seems pretty straightforward. Micron is spending $1.8 billion in cash to acquire Powerchip's P5 fab in Taiwan.
And the primary takeaway here is that AI demand is now so strong and so visible that it's driving multi-billion-dollar physical infrastructure expansions. They need more floor space to build the memory that all the AI models require. It's a very tangible vote of confidence in the future of AI.
Please note, this content is not financial advice or buy or sell recommendations. This is purely the opinion of the author.
Until next time.
Thanks for listening.